Let's jump straight into this explainer on the massive 30,000 crore headline shaking up Indian markets right now. The National Stock Exchange just dropped a bombshell, filing for a monumental 30,000 crore rupee IPO. This completely smashes previous records held by Hyundai and LIC. We're talking India's biggest IPO ever, guys. But here's the catch. The exchange gets zero fresh capital. It's just existing shareholders cashing out. Why the insane valuation? Well, they're pulling in 16,000 crores in revenue with absolutely wild profitability. However, that crazy profit engine is highly and maybe dangerously concentrated in just one specific area. A massive 60% of their operating revenue hinges entirely on highly speculative equity derivatives. Even wilder, nearly half of that colossal revenue flows directly from just their top 10 brokers. So with numbers this mind-blowing, you gotta ask, why did they wait a full decade to list? Well, the fine print exposes severe vulnerabilities, from massive cyber attacks to unpredictable AI-driven market manipulation. Plus, SEBI's strict new rules meant to curb speculative trading are already hammering their core earnings. But their biggest baggage comes from co-location. That's essentially brokers paying to skip the line with their servers. This triggered a decade-long scandal that completely derailed this massive IPO up until this very moment. Basically, investigations found that VIP brokers bypassed the rules to peek at market data before anyone else. To put that in perspective, one single broker allegedly raked in 250 million rupees unfairly. This massive cheat code triggered an intense multi-agency fallout, leading to tax raids and top executive arrests. Now, they're proposing a staggering 1,491 crore rupee settlement just to move forward. So, investors have to weigh this unmatched market dominance against a massive shadow of lingering regulatory risk. Ultimately, does the sheer scale of India's largest exchange make its dark history a risk worth taking?